Alright, I saw this article on newsmax.com. I was actually looking at this one YouTube video. It seemed really convincing, but actually I looked into this after doing some research for this podcast. But anyways, it says billionaires dumping stocks. Economist knows why. Despite the 6.5% market rally of the past 3 months, a handful of billionaires are quietly dumping their American stocks, and fast. Warren Buffett, who's been a cheerleader for U.S. stocks for some time, is dumping shares at an alarming rate. He recently complained of disappointing performance at the die in the wool companies like Johnson & Johnson, Procter & Gamble, and Kraft Foods. In the latest filing for Berkshire's in Buffett's holding company, Berkshire Hathaway, Buffett has been drastically reducing his exposure to stocks that depend on consumer purchasing habits. Berkshire sold roughly 19 million shares of J&J and reduced his overall stake in consumer product stocks by 21%. Berkshire Hathaway also sold its entire stake in California-based computer parts supplier Intel. With 70% of the U.S. economy dependent on consumer spending, Buffett's apparent lack of faith in these companies' future prospects is worrisome. Fortunately, Buffett isn't alone. He talks about Paulson dumping some stocks, JP Morgan, and Family Dollar, and consumer goods maker Sara Lee. It also talks about Soros sold off his bank stocks, and it says that he sold more than a million shares. So why are billionaires dumping their shares of U.S. companies? After all, the stock market is still in the midst of a historic rally. Real estate prices may have leveled off for the first time in 5 years, are actually rising in many locations, and the unemployment rate seems to have stabilized. It's very likely that these professional investors are aware of specific research that points towards a massive market correction, and as much as 90%. One such publishing this report is Robert Wiedemer, an esteemed economist and author of the New York Times bestseller book Aftershock. Okay, let's take a look at this. First of all, when I saw this video on YouTube, I was like, damn, this is really, really interesting. But then I looked into it and looked into what Buffett was doing. It seemed that Buffett still has large stakes of some American companies in his portfolio. Okay, the sixth largest holding is Exxon Mobil's, right? He's big into oil. I'm going to get into oil on why he's probably reshuffling his portfolio. And if you want to look at some of his other companies, his top 5 holdings, it says that he does have holdings of P&G. I don't know if that Newsmax article said that he did get rid of some holdings of P&G. I have to double check that. And this article on CNBC was done recently. His holdings. So it's IBM, number 3, let's see how long it takes to load. American Express, okay, American company. Coca-Cola, another American company, I believe. Yes, it is, yes. And the first one is Wells Fargo. So if you look at it, that article, I don't know what it was talking about. I mean, it may be making a good point that it's getting rid of some American companies that are leaning towards the consumer end, but at the same time saying that it's going to crash because, I mean, Warren Buffett sold some of these stocks. I don't think so. But the main important point has to deal with oil, and Warren Buffett is shifting his portfolio to a certain degree, and I'll get into this right now. Warren Buffett's portfolio reshuffle in 2013 is betting big on oil. America is in the midst of a quiet revolution. Across the country, new technologies are unlocking billions of barrels of oil and gas, and this development is so big that the IEA predicts that the U.S. could be energy self-sufficient by 2035. It should be no surprise, therefore, that an opportunity this big has attracted the attention of legendary investor Warren Buffett. And let's just look at his 3 purchases, recent purchases. One is Exxon. And the reason why it says that he may have bought it is that they're the best capital allocator in the business, Over the past 5 years, the company has generated a return on invested capital over 25%, the highest of its peers. Okay, that's interesting. Buffett also owns 17.8 million shares of this oil sands stock. It's Suncor Energy. And it talks about Canada and how Buffett sees opportunities. And the next one is Phillips 66, and this article talks about the positive aspects of Phillips 66 and why Buffett would want to buy it. So now the question remains, why did Buffett get into these oil stocks? Why did his portfolio suddenly shift to a certain degree? Why oil? And my hunch is why he's going into oil as a hedge against inflation. He sees what the Federal Reserve is doing. He's not dumb. His father was Howard Buffett, a libertarian candidate, actually in Congress. And he understands inflation. He's not going to bash the Federal Reserve because he's one of those progressives, or he's really rich, and I think part of the reason why he doesn't want to do that is he doesn't want to look like the bad guy. He doesn't want to be hated because of his wealth. So that's why he comes out with schemes like, yeah, it's okay for me to pay higher taxes, so on and so on. And why is he getting to oil, in my opinion? Hedge against inflation. With the Federal Reserve printing all this monopoly money, he sees, okay, what happens if my rest of my stocks go down? At least I could have a hedge against inflation. What if it's like the 1970s? So that could be going through his thought process right now. And it's interesting, no gold though. And you have another individual, Mike Status, who I've talked about from time to time. And he also talked about oil could be a hedge against inflation that we may see in the next few years, not gold. And he says because of the petrodollar, right? For those that don't know the petrodollar, basically there's a quid pro quo agreement between the Saudis and the United States that, you know what, Saudis sell us oil, the United States protects their foreign interests, foreign policy interests. And because of that, and because of all this monopoly money, who knows? Could you have another Arab Spring, which could make oil go up, and could it be a hedge against inflation? We don't know. And with the dollar pegs, you could potentially see nasty inflation happen in the Middle East, and when they throw fits in the Middle East, future traders or speculators in the futures markets drive prices higher. That's how it usually works out. So we got two different individuals betting, not betting, but who have a hunch feeling that oil may go up because of what the Federal Reserve is doing and because of potential inflation down the road. So this is something to think about. So why is Warren Buffett buying oil, in my opinion? As a hedge against inflation, and B, he thinks that oil seems attractive at these levels. You don't see mainstream media guys talk about oil that much. Only talking about trading in terms of oil, not about these companies. So I'm putting my eyes on this, or it's on my radar, and since it's on my radar, you know what? I may add to some oil positions. I did get rid of a short position in oil this past week as a disclosure. I may go long soon. And I know that my buddies at Wall Street for Main Street are big on oil. They did a petro profit report, which I interviewed them on last year. So it just seems that could it be a contrary play? Potentially. Once again, this is not telling you what to do. You got to do your own homework in order to make investment decisions or talk to your financial advisor. These are just my own thoughts on what's going on. And before I leave, just remember to check out my video that I did yesterday on my second channel. I make predictions for 2014. I'm going to put the link below and subscribe to that channel as well. And like my video here and like that video there. And yeah, subscribe to this channel if you haven't either. Thanks for listening to me, guys. I'll talk to you another time. Bye.